Okay. Good morning, everybody. Good morning, Vice President. Good morning, Commissioner. Good morning, all the people who are here in this hall, and all the people who are behind the screens following us on the streaming. Thank you for inviting Elcano to introduce this conversation between our Spanish Vice President and our Commissioner, European Commissioner for Stability, Financial Stability. It's really an honor to be here. I am going to be very short, and given that we are going to talk about financial system and banks, financial stability, I will start quoting the former Prime Minister of Uruguay, Julio María Sanguinetti. Julio María Sanguinetti says something very interesting. Banks may not lead you to paradise, but they can send you to hell in just one afternoon. Just to avoid and to prevent new financial crises, we have regulations. And our commissioner is in charge of regulation in Europe. We have independent central banks. We have even Nobel Prize winners that explain us how a financial run happens and how it affects the real economy and the life of millions of citizens. Commissioner McGuinness, in September 2020, when she was appointed, received a letter from President Ursula von der Leyen. It was a letter that you can file on internet that is called a mission letter. In this mission letter, von der Leyen told Commissioner McGuinness, your task over the next year will be to preserve and improve financial stability, protect savers and investors, and ensure the flow of capital to where it is needed. It's really a very, very timely and very hard task. Maybe this is what we are talking to do. And the first question is I would like to raise to the audience is, the time of reckoning has arrived. Now that as interest rates are driving up to counter inflation, that political tensions are growing and commodity prices are going up, are the world just expecting or waiting for a new financial crisis? At least it's a very volatile place. It's a very volatile place because we are facing too many risks. We are facing a risk of recession. We are maybe facing big chips in the balance of payments due to the terms of trade shock that we have had, especially on energy goods. We have expected and unexpected financial events in the last months. We have had, for instance, the Sri Lanka debt crisis. We have had the crypto collapse, such as FXT bankruptcy and the decline in the price of other cryptocurrencies. We have had Liz Truss yield market blow up. We have had signs of tightening in liquidity in the US Treasury market. And we have worries about what is going on the global housing market and especially on the Chinese real sector. We are living in a world of uncertainty. And in this world of uncertainty, to have good regulation, to have leadership, to have people as the Commissioner McGuinness and Vice President Nadia Calviño, sure they are looking at the facts, following the facts by the day, it's extremely important. I think that both of them know that's the most important thing to do when all these volatilities on the arena is to pick your fight. It's to select where you can be most effective. And I think this is going to be around the conversation we are going to engage just in 2 minutes. Let me begin by the beginning. Where global wealth is. Maybe despite all the ideas you have in your minds, equities may made just 22% of global wealth, something around $110 trillion. Private and public debt make something like 25%. And the remaining global wealth? The remaining global wealth is real assets, real estate assets. Something like 250 trillions of dollars in residential wealth, it's what is there. And when interest rates rise, the real market begins to suffer. Therefore, it's not just this market. Real estate, it's in some way the foundation of vast amount of leverage in the financial system. Therefore, even small tremors in these markets can trigger off some very, very unstabilizing financial shocks. In this idea, I am going to ask Vice Presidenta Calviño, because she has very recently reached an agreement with domestic financial institutions to manage the social impact of the rising interest rates on mortgages, the impact that these could have on the middle class. And I think that this is a good start for this conversation on financial stability, and maybe also Nadia Calviño would like to share with us some other comments just to put on context what is going on in the market. Nadia, the floor is yours.
Muchas gracias, querido José Juan. Bienvenidos al Ministerio de Asuntos Económicos y Transformación Digital. Welcome, dear Mairead. I'm so glad that you're here, that you're in Spain, and that we can have this exchange in public on some of the issues that we will certainly be afterwards talking in a more restricted meeting that we will be holding after this event. And I am very grateful also to Elcano Institute for their organization of this discussion, which has raised a lot of interest, and I think is extremely timely because there are so many issues on our table that have to do with financial stability. So it's a great pleasure to be here today. And I'm going to share some thoughts with you that I've been having in my brain in the last years, and that maybe are crystallizing now as some of the risks are materializing, some others aren't, and some key features on the way forward. First, José Juan and I, we very often discuss how financial crises, they take longer to materialize, but when they unfurl, they do it much faster than you would have anticipated. I think that this is something that we have learned from history. And in the last years, we have had the great financial crisis, then the pandemic, then the war. And obviously, in the pandemic and now in the war, so far, we have been able to avoid a great global financial crisis, as the one we suffered starting in 2007. But my main lesson from history, and in particular from the experience we had in 2007, and at the time, I was in the Commission, and I had to deal with financial regulation in those turbulent years. I would say financial stability cannot be taken for granted. This is something that we have to bear in our minds every day when we are dealing with other challenges and with other problems. I say this because in the last months, there have been many people who have not talked so much about this, or sometimes we feel a bit of complacency. But this is something we should never take for granted. Since the great financial crisis, we enacted a massive volume of regulation at global level, at European level. We reinforced our multilateral financial system. Also, we reinforced our European stabilization instruments. They have all proven to be very effective. Now, this leads me to my second point, the experience of the pandemic. We acted at global and European level to respond to the pandemic on the basis of three principles: unity, determination, and solidarity. And I think they have proven to be the right principles to address such a global challenge. We coordinated our economic policies throughout the world. We reinforced our financial safety net to provide space for governments to be able to support their people and to provide the necessary health system reinforcement and measures to support the population and protect the population. We acted united to develop the vaccines, to make sure that these vaccines would reach all citizens in Europe equally. This we cannot take for granted at all either. So I think that all in all, the experience we've taken from the response to the pandemic has been extremely successful. And that is why I think that these three principles are the ones that should guide us forward now as we are responding to a new challenge derived from the war in Ukraine, inflation pressures throughout the world, the increasing interest rates in the key international institutions and jurisdictions. That's my third point. And as you rightly said, José Juan, since the war broke, first concern was, obviously, the defense and security concern, but the second one was the impact on the economy. Then immediately the energy crisis broke, bringing up prices of energy and other raw materials, and then bringing unprecedented inflationary pressures in many Western jurisdictions. Unprecedented, or at least we hadn't lived them for many decades, so we were not used to them. And this has turned central bankers and the Fed to accelerate the interest rate increase, the normalization of monetary policy that had been forewarned for years, but now is sort of accelerating in the course of the year. And the first concern when there is such a fast increase of interest rates in the US is obviously financial stability in most vulnerable countries throughout the world. We reinforced the IMF and the global safety net. So far, we are able to have mechanisms to provide relief to most vulnerable countries, to restructure the debt of most indebted and most vulnerable countries. And so far, we have been able to avoid a global financial crisis such as the one that we lived in 2008. I insist in the concept so far. We can never take this for granted. I devote a great part of my time, which is totally invisible generally, and we devote a lot of time, of our time, to try to ensure that this does not materialize, this risk. And what has happened? Well, we've seen the UK having a financial trouble, a very intense financial trouble. Governments have changed. The economic policy has turned 180 degrees around, but this has not been transmitted to the Eurozone. We've seen bubbles bursting. You talked about the crypto collapse. We see also some other bubbles in the areas of the large digital hyperscalers market valuation and the stock markets. But so far, this is not being transferred to the rest of the financial sector. Fortunately, the European Central Bank, before starting the increase of interest rates, enacted a number of mechanisms that are avoiding market fragmentation and so avoiding a sovereign debt crisis such as the one we lived in 2011 and 12. So, despite the fact that liquidity is being drained from the markets at global level, and this is having an impact, obviously, in financial markets, so far the impact is not reaching the core of those financial markets and therefore is not risking financial stability. But this is something really that we have to bear in mind and be very vigilant about. We shouldn't have any complacency in this regard. My fourth point is precisely the one of what should we do? We should anticipate, try to act fast, in an effective manner, anticipating possible risks from materializing. We cannot wait. When you react, you're already too late. That's what we have been doing. In Spain, since we started to see energy prices going up last year, we started to act. We put a lot of pressure on the European Commission to act as fast as possible. It's taken a year, okay, better late than never. We think we have to be fast and ambitious. There is a strong resistance on the side of every institution to change things, to change market regulations. But when you are confronted with this kind of shock as the one we're living, we need to be very fast and very effective. That is what we have been pushing for from Spain, and we will continue to do so today in the Energy Council. Just to name an example, but in all the meetings. And Mairead and I, we've been together in a number of meetings, and you have always heard me say the same, we need to change energy regulation, financial regulation. We need to really try to anticipate and prevent risks from materializing. That is why, and that leads me to my two final points, mortgage relief. José Juan was mentioning it. We just adopted a significant package of measures on Tuesday to provide relief to most vulnerable families and also middle-class families that could be severely affected by the fast increase of interest rates, affecting obviously the Euribor, the reference interest rates for variable rate mortgages. I want to be very clear on this. We are not at all concerned by any material macroeconomic risk in this area. The housing market has changed significantly since 2007. There has been a switch in terms of the percentage of mortgages of fixed and variable rates. So around 60–70% of mortgages in the last years are fixed rate. The stock, the outstanding stock of debt with variable interest rates has gone down very significantly. The average outstanding period for payment has gone down from 18 to 10 years in the last years. Moreover, the households and corporate sector in Spain is less indebted, has low leverage as compared to other moments of our history. And we have been, for the last years, providing very significant income protection and relief to the families, so they are in a relatively good position to withstand the increase of interest rates. Non-performing loans are still at historical minima, and there is no sign for the moment of a significant increase. So this is not due to a macroeconomic concern. Nevertheless, we have anticipated the potential impact on part of our families, of the families in Spain, of the revision of the interest rates that will come in the coming months, and in particular in the first half of 2023. And instead of reacting to the problem, we have been working very intensely with the financial sector to anticipate it, to adopt now a framework that can ensure that families have an array of different instruments to try to extend the duration of their mortgage, revise and freeze the monthly payments, having a period of no payment of the principal with lower interest rates, even below Euribor interest rates, all sorts of relief, which is particularly targeted at vulnerable families, taking into account whether they have a significant number, or they are, I don't know the name in English of familias numerosas. They have more than 2 children. They have any person with a disability in the family or any other sort of element that would lead to a higher vulnerability of that family. So these are targeted measures. They are preventing a possible situation of difficulty that may arise in those families which are not only directly affected by the interest rates, but also most directly affected by the general increase of prices derived from the energy crisis at the international level. So I wanted to mention the example because I think it is a good example of the convenience of acting in advance to be ahead of the curve instead of reacting when it's too late, and then we could be confronted with different kinds of risks. My final point in this regard, and you were saying, what is the most important thing? Last night I was participating in another event and sharing with the audience the importance of the invisible, the importance of that which is intangible. I don't need to explain this, no? In financial markets and in the financial sector, I'm sorry to say, Lord Keynes was absolutely right. Animal spirits dominate many times, and they can trigger a bank run, which may or not be justified. They can trigger a run on a country, which may, again, be or not justified, or on a currency. And that is why I think the key word that we absolutely need to protect is trust, confidence, trust. From the perspective of the Spanish government, we're absolutely committed to reinforcing this intangible. This has allowed Spain to have today the budget for 2023 adopted in Parliament for the third year in a row. We should not underestimate the importance of political stability, economic stability, doing what you say, saying what you do, as we have been doing since we took office in 2018. This provides certainty and trust to financial markets. Our draft budgetary plan has been validated by the European Commission, by the IMF this very week. And we have a recovery plan, an unprecedented instrument, an example of European solidarity that we are taking as a unique opportunity, a historical opportunity that we will seize to the maximum. The developments and the resilience of the Spanish economy, the strength of growth in 2022, 2021 and 2022, forecasts have been revised upwards this very week also to a level around 4.6%, 4.7%. This is a very strong growth. The extraordinary performance of the labor market, the dynamism of consumption and investment, public and private investment, cannot be understood without the Spanish Recovery Fund and the Recovery Plan and the Next Generation EU Fund. And that is why I can close by saying how happy I am to have here a fellow colleague around the European table, so that I have an opportunity to again recognize and appreciate that this time around Europe has provided the right response, one based on solidarity, unity and determination, and you can count on Spain supporting you all the way through to continue on the same track. Thank you.
Thank you, Vice President. I think I will keep in my mind for your very clear address three main takeaways. The first, that financial stability has never to be taken for granted. The second, that the right strategy is to work together, unite with determination. And the third one is that although we are not in face of a big problem, macro problems like we were 10 years ago, we need to anticipate, and this is the full policy that you and the European governments are developing. Let me reintroduce in the conversation some of the topics that I have pre-announced at the beginning, just to ask her comments to the Commissioner. I think that one source of financial stability and stability is the big US Treasury market. And in the US Treasury market, we have clear signs that some liquidity problems are taking place. And when liquidity problems appear in that market, everywhere it's felt, the situation. We are trapped in a US credit cycle in some way, and maybe we have to have some thoughts on what is the right answer from the European point of view to this US credit cycle. The second thing that I will try to, or I will raise to our Commissioner will be, do you feel that our European financial architecture, institution and regulation prove or can prove to be adequate to protect savers and investors? And you were mandated by the chairman, the president, the president of the Commission, or we still lack some pieces in this regulation. In fact, I'm trying to go directly that can Europe really face all these kind of problems without having a banking union and a capital market union? Where are our priorities? Nadia was talking about anticipating the impact, but here maybe what we need is to try to bring back our whole agenda and to try to fulfill the agenda. But maybe you can comment on that, Commissioner. Thank you very much. And welcome to Spain.
Thank you very much. Happy to be here.
So, I was going to say good afternoon. It is good afternoon. It feels still like morning. So, ladies and gentlemen, very happy to be in Spain and very happy that we're discussing a vital topic. And I want to really say to First Vice President Calviño how happy I am that we are on stage together. We share every month meetings where we talk about clearly financial stability and other issues. And I value your support and your absolute commitment to this topic. Maybe I could introduce another topic to broaden the conversation and to reflect on the reality in Ukraine today. As we speak, people are being murdered through an illegal invasion, Russia to Ukraine. And if you recall last January, we didn't anticipate that in February there would be a war on European soil. So we are right to always worry about the unexpected, but in this case there is a huge humanitarian and geopolitical perspective. This isn't just about money, this is about values and human rights and dignity. And therefore I think the collective response of Europe to that invasion in February was absolutely correct by way of sanctions. And we have, as a European Union, working with our allies, rolled out a significant number and depth of sanctions on Russia, oligarchs, the financial system, trade, etc. And these sanctions are impacting, as they should, the Russian economy, because our objective is that Russia would stop this ugly war and that peace would prevail. And of course, there are consequences for the European Union because of our collective action and solidarity with Ukraine. And I think it is remarkable that after 9 months, both the strength of the Ukrainian people and their government is sound and there, and the strength of the European unity and solidarity with Ukraine is there. So I wanted to put it in this broader context of why financial stability in Europe matters and is impacted by the broader picture. Also, I think it's very important for Europe to acknowledge that we were not quite so resilient as we thought. We discovered in COVID, for example, that we were over-reliant on some very basic medical equipment, protective equipment, drugs. So we had allowed ourselves to become completely reliant on 1 or 2 suppliers. That is changing because we saw the problem. I hate to say the truth, but it is the truth that we have discovered our over-reliance on Russian fossil fuel was not a good policy because Russia is not a reliable partner. If you look at what Europe has done collectively, when we saw that energy was being used as a blackmail tool, as a weapon in this war, we are now, instead of taking 90% of our energy, or gas rather, from Russia, it is down to 9%. Perhaps I got the first figure not fully correct, but massive amount of energy and gas coming from Russia, now very little, but some still coming. We have managed in those months to diversify our sources of supply, to encourage us all to use energy much more efficiently. But for me, the big prize, and it's linked to Capital Markets Union, is that we invest in renewables. And this country has huge potential and is doing a lot in this area. We can never go back to the place we were in January of this year because we have found ourselves to be completely vulnerable. And I think the naivety sometimes in Europe is gone. So we talk about open strategic autonomy. Where are we vulnerable? In other supply chains, and how do we and where can we take action? Resilience is a key word, not just in the financial system, but across all of our supply chains. And we work hard with the member states to embed the concept of resilience. If you look at the energy market, and we're going to have a robust discussion around energy because this is a crucial issue, member states differ in their energy mix. This is clear. And therefore, there are different responses. But all member states have correctly identified vulnerable households for support, vulnerable business for support, and that was the same as what happened during the COVID crisis. And let me also say, to the credit of our banking system across Europe, it was an important vehicle during COVID to support both businesses and citizens by way of rolling out the supports governments had put through the system. And yes, you are right, Nadia, the system has been robust. But it was robust because we regulated, not because we turned a blind eye after the financial crisis. And it is true to say that so far, and I use your words because these are words we will all use, so far we have maintained financial stability. I suppose I don't worry about what I see and know. I worry about what I do not see and yet do not know. And this is what keeps us awake at night, even though what we need is a really good night's sleep so that we can face the challenges. But let me talk and address some of them. Banking union, capital markets union. In my mission letter, I have to deliver on all of this, and I have about 1.5 years, so much to do. But these are really important topics. And the one plea I would make to all of us is that we talk to people and that people own them rather than them be at a technical and political level. Because citizens want to be able to make bank transfers easily, to borrow across border, to get investments from other places. So banking union is not complete. We're not there yet. We've gone some distance, and I thank you, Madam Vice President, for your support on banking union. But there is not overall political support yet, not yet, in terms of the big steps, so the European Deposit Insurance Scheme. However, we have been charged by the Eurogroup to look at crisis management because that framework is not just fit for purpose. And we will do that, and we'll have these conversations and debates next year because we want to see the completion of banking union. It is to strengthen our banking system. We also want capital markets to develop because we don't want to be over-reliant on just bank finance, and we see the opportunities for small and large businesses and for retail investors to invest in and through capital markets. For me, the story on capital markets is more positive. I think that the steps we're taking, they're technical, they're around insolvency issues, they're around a retail investment strategy, withholding tax, listing act, single access point for information. You know, not very dramatic, and you're certainly not going to talk about them over your coffees, but without them we won't have capital markets union, and we need it. We need deep pools of liquidity because we have to invest in a more sustainable and digital Europe, and that need is absolutely urgent. So step by step we're building our capital markets union, but we need, again, strong political support, and that's very, very important. So we will reveal some of these proposals in next month, and then more will come in the new year. Let me just briefly talk about digitalization. It has revolutionized the way we deal with finance. And I think that acceleration of change in COVID has been dramatic. So it's not just a younger, digitalized generation. I think those of us who are older are also very well and truly digitalized at this stage, and that's important. But with digitalization, we have enormous innovation. I had the great opportunity to listen to the presentation from Bisum. I was fascinated by its penetration, its simplicity. It works, it's a service, and millions of Spanish are using it. I think I need to open a bank account here to use it, so maybe we need to talk about that. But it was really interesting to see what can be done with cooperation amongst the banking system and rolling out a service that is really important for citizens. We need to manage all the risks behind this. One of my other wake-up moments in the night is when the system fails us, so when there's an attack on technology and what happens then. So we have worked with, at Commission level, both with this Digital Operational Resilience Act, so we need strong protection of the system. We talk here a bit about crypto and the meltdown in some areas. Here we need regulation. We have our markets in crypto assets. So Europe is leading the way on many, many of these things around the evolution of technology and its capacity to be really positive. But you know, technology itself is neutral. It is how we use it will be whether it's good or bad. And I think we as policymakers and regulators need to manage the risks behind this. I shouldn't talk about instant payments in Spain because you have it. You are leaders here. We rolled out just recently a proposal on instant payments. I know I have your support because many citizens in Europe do not have this basic service of instant payments. And if they do look for it, they pay hard for it. So we're rolling this out because it would take a decade for it to happen organically. So sometimes you need legislation, and you absolutely need it in the case of instant payments and this whole digital process. Digital euro is a discussion point. It's not solving a problem of today. It's addressing a potential challenge of the future, and perhaps we can discuss that. But the big word that we share is the word trust. I have it laced through my words here, because trust takes time to build up and is wiped away in less than a second. and very hard to reconstruct. And I would contend, and I think this is a fair comment across our member states, that the trust in our financial system is still being rebuilt among citizens. It was destroyed because of the financial crisis, and rightly so, because citizens and families and businesses suffered terribly. And therefore we are very conscious, and I spoke with the financial system here in Spain, we are all very conscious of how important it is, whether it's digital or real, you have to trust the system at all times and in all places because of the vulnerability and because of the damage when trust is broken. So we have huge opportunities in Europe along with huge challenges. For me, the financial system is the backbone of everything. Money matters for everybody, whether you're a child that gets pocket money or a student who's looking for support to go to college or a mortgage. Money matters throughout our lives. I would love to think that in my time in office, which is relatively short, that I will bring the topic of money mattering to people so that they will take control of their money and understand why it's important that they ask questions about how they invest or where they save, and that they are not, if you like, lacking in confidence in facing the financial system. Last comment around the topic here, and it's a really great opportunity to have this conversation at a time of an energy crisis, a migration crisis, a crisis of uncertainty, which is prevailing, but I think with uncertainty we've managed, because we've been strengthened by how we acted collectively during COVID. That should teach us lessons, because we started badly, but we got our strong act together. And I would commend the leadership of the President of the Commission, Ursula von der Leyen, for her strength during some very difficult moments. People expect Europe to be there in times of crisis, but we shouldn't wait for a crisis to build on financial stability, to build banking union, to strengthen capital markets union. We should do it here and now. And I think certainly we have Spanish support for that, and that for me is absolutely crucial. Because without a stable financial system, we will not be able to do all of the things we need to do. And I would say that perhaps we haven't understood the enormous challenge of change towards sustainability. You know, we've had the COP meeting in Egypt. We've heard all of the repeat of promises and commitments. It's now time for action. We are supporting our businesses, large and small, to move in this direction. Our financial system, I know there are some who say you're asking us to do too much, but money is key to this, so we're asking you to do a lot, yes. And we have our taxonomy and other measures to help you in that direction. In a time of great change and uncertainty, you need stability. And I would support your remarks that we need stability across Europe. And sometimes it is better that we're boring rather than dramatic. I've avoided talking about energy too much because I want us to have a good debate about what the Commission has doing and is doing on energy. But mark my words, we are in a very strong position this winter because this Commission under Ursula von der Leyen said, start being more energy efficient, start filling the gas stores now, and start investing in renewables. Our challenge is next winter, and I look forward to our debate. Thank you.
Thank you, Commissioner, for this very clear, again, and very passionate address. I like a lot your tone. I will take three main ideas from your address. First, you are completely right to broaden the conversation and to remind us Ukraine and what is going on there. I think that, as you have very clearly exposed, COVID and Ukraine has made us to see the real problems. The first thing to face a risk is to identify and to shape how to deal with it. It's a very good remark. The second point, and this is also very important, it's what must worry us. It's not what we see, because what we see, it's quite well. It's in a very good position. What worries us is what we don't see, and this is precisely. That is the anticipation that Vice President Calviño was mentioned before. And the third idea that I will keep up will be this idea of financial stability as a prerequisite to act united and with determination. we, all of us, know what are the real costs, not just economic costs, but politically and economic costs of a financial crisis. And therefore, it's very, very important to recover trust, to define and to make a much more resilient and appropriate financial regulation. I have been reminded that all of you that want to raise questions, both here in the room or through streaming, you have to send your question to actividades@rielcano.org, and our people will pick up them and will pass to me. Well, we are going to a second round of intervention, and I will begin by Nadia Calviño. I think that financial stability does not operate in an empty space. It's the interaction of decision of the household and companies when they form their balance sheets. It's the result of the interaction between monetary and fiscal policy. And maybe one of the things that's in line with this philosophy, new philosophy in Europe of acting together, maybe one of the things that is interesting to realize is that we need, again, to have some rules. We have the need to reinstate some fiscal rules to recover trust from all other markets and politicians and the society. But maybe the design of these fiscal rules will need to incorporate some of the lessons that we have learned in the last 3 years, the importance of European public goods, and how we introduce this idea of European public goods, how we explain to society that it's not sensible not to do an investment on defense or an investment on climate change or a defense in social policies, which are European public goods, just because you have a public sector deficit which is slightly above the target. How we introduce this conversation in Europe, how we go to the details and we make operative this idea of European policies, public goods policies, European public goods, and above all, how we create safe European assets which can liberate banks from this loom between sovereign and banks. That is also, to me, one of the main risks that maybe we are facing, not now, but as you have said, we cannot take for granted that this is going to continue. Nadia.
Well, I would like to start by saying that the Commission's proposal on the new fiscal framework, I think, is a very good starting point. Not only because it very much corresponds to the Spanish and Dutch paper that we published back in the spring, because I think that it does synthesize and provide maybe a landing zone of where the different positions of the different countries can be reconciled. But because I think it tackles the right issues and is a very balanced proposal. So from the perspective of Spain, and I said it immediately, it's a very good starting point. Now we need to get all the member states to engage. But I think that the incentives are clearly there, because as you rightly said, we are not in the same place we were 4 years ago before the pandemic hit us. Debt to GDP ratios have increased in all member states. We are all aware of the need to undertake massive investments in the area of green and digital transformation. If we had any doubt, the war has been absolutely clear, as you rightly said, Commissioner. I mean, we need to accelerate the deployment of renewables. We need to reduce our dependency. Likewise, in the area of technology, chips, semiconductors, we have also discovered our weakness in that area. So Europe will need to undertake these massive public and private investments, and they can be done at national level or at European level, but we will need to do them. So the issue is how to articulate the national fiscal rules and the European budgetary power, and this debate we will certainly also have, and these two debates will be in parallel and coincide, and maybe, for good or for worse, come to fruition and maturity under the Spanish presidency. As will happen with many of the most difficult debates which are taking place in Europe right now. So everybody and every meeting we have with my dear commissioners is a list of things that to-dos for the Spanish presidency, and I'm sure our bilateral meeting will be about that too. Because the Spanish presidency will be the last of the cycle where there can be material deliverables before the elections of the European Parliament, because many of these issues are being presented around now, and so we will need to, it will take a year, and then they will come to maturity. So we're going to be extremely busy in the second half of 2023. But I am confident that we will have an agreement, because there's no plan B, really. I mean, we need to have a fiscal framework which is fit for purpose before we reinstate the rules, which have been accepted, non-applied for the last, for 2020, 2021, and now 2022, which does not mean that member states don't have fiscal discipline. I think that we're all very well aware of the need to pursue a fiscal responsibility path, at least in the case of Spain, as I already mentioned. We are using the fiscal space, the ability derived from the very strong growth and job creation, to pursue the downward path of deficit and debt to GDP ratios in order to ensure financial stability, contribute to financial stability in Europe.
Great. Maybe you so.
And we've made the proposal and appreciate your words, but I think, yes, your paper was helpful because you had the Netherlands and Spain joint proposals and thoughts. And I think we all agree that we need massive investments and that the public purse will not be enough, but it will play some part. And that's why all our other measures around capital markets union, sustainable finance are really, really vital. But I think we need to again look at what we did in COVID. We borrowed collectively. Who would have thought before the pandemic that this would happen? Probably I had not envisaged it in my lifetime. I hope I live long, by the way. But now it happened, and it happened because there was a need and a collective understanding that COVID was a crisis of no one's making, but hugely impactful. And I think we managed extraordinarily well not to allow a medical pandemic health crisis to overwhelm us and become a financial crisis. And that's why I give praise to the banking system for the work that they did there. But clearly, all of this hinges on the fiscal issues, the fiscal space, as it's so called, and the rules. And the rules have to be flexible enough for the times we live in. And I hope that our proposal under your presidency will have the traction that is necessary, because I think it gives certainty then to our member states as to the way forward. But at the time of COVID, we needed to take a different view, and a different view was taken. And I think we realized, because this virus wasn't, staying in one member state, that we were really in this together. And maybe also in it together globally. I mean, you referenced, which was a really important reference, the support for those countries that are really struggling now because of the pandemic and because of the current interest rate increases. So I think Europe also has a global, if you like, responsibility around these pieces. And it's better that we're stronger internally, both from a financial stability and indeed public debt point of view, that we can then support those who do need our support.
Oh, completely agree. Commissioners, you have been mentioned several times the idea that we are going to need huge amount of money to fund all the investment that we need to complete the technological revolution, the climate change, the change in social policies. Do you feel that the European banks are prepared to do that? Because when we look at the map, the ecosystem of banks in Europe, and you see what has happened in the last 10 years since the crisis, what you see is that they have lost market share. They are not as profitable as they have been in the past. Of course, they are much better capitalized, much better regulated, much better surveilled. But when you compare the European banks with the American banks, you see that there is a big gap. And another interesting thing, that despite these problems of efficiency, low profitability, there has not been a major force pushing for consolidation in the European Bank. Maybe what can derive from this apparently very conflicting feature of what is going on in Europe? And more clearly, do you think that they are able to finance the revolution, or we are going to tap other sources of financing which are not going to be European, but maybe it's not bad, but maybe it's running against this idea of financial strategy or autonomy, strategical autonomy? And the second one, why don't happen this consolidation? For an economist, it's really very difficult to understand what this is not happening.
I'm going to try and help your understanding, but I don't have all the answers. I think we have to reflect on what happened in the crisis, and that people were so shocked and impacted by this crash that in one sense the banking system, if you like, became very nationalized. So there was almost this sense of all member states wanting to look after our own and not to allow this broader discussion around banking union. There's a lack of trust between member states around this issue. Some are willing to move forward, others less so. So we're in this post-financial crisis, if you like, umbrella still. I think we need to break out of that. I've had discussions here already, and I'm saying we need to talk about why banks matter, and why it is important that they are profitable and that they fund society and societal goals. We're asking the financial system, for example, to report on how they are investing their money or how they're lending, to whom, for what purpose, so that we begin to see, are we going to achieve our targets on climate change? I mean, we're not putting these regulations in place just to annoy the banking system or corporates. It's to actually say, look, we need information. If we are to make change, we have to see where money's going. Is it going in the right direction? If it's not, what can we do to help that? And that's also for the corporate sector, not to see it as an imposition, our sustainability reporting requirements, which are coming, but to see it as a way of public-facing as companies, what we're doing around sustainability. And you see, in one sense, we have no choice. So this isn't about whether you want to do it or not. We have to. We have legally binding commitments. I think we have a moral and ethical duty because we are the wealthier part of the world. You saw the discussions, and Europe led them, around supporting those countries that have taken the burden of climate change but have not been the cause of climate change. So whether we get the finance through banks or through the public purse or through capital markets, there is money there. I mean, here's an interesting thing for me, that during COVID, those who are working were saving. The banks will tell you the deposit levels really went up. That money could be better used, better invested. So again, our retail investment strategy coming in the new year is to try and get us talking about how we as citizens could invest. And I think that there are many citizens who want to invest in sustainability. And what we don't want to see is that they invest their money in the belief that they're putting it in a sustainable investment. So we want to make sure there's no greenwashing, which is why we get back to this information flow and what's necessary. So my challenge as somebody who's working on sustainable finance is to make sure the financial system is orientated in the direction of our legal obligations around climate and biodiversity and water. I mean, I'm here in Spain. Droughts across Europe were so impactful. You can still see they're having an impact. So there are real world consequences of climate change, and there are big financial instability risks if we don't address it. So from all perspectives, there is an imperative that we access the finance and we make sure it goes in the right direction. I know that when I talk to investors in renewables, they say to me, we have projects, we can't get permits, please help. So we are doing some work on this. And maybe we need a bigger discussion in society about what are we prepared in terms of discomforts to accept in order to make us resilient from an energy point of view, and indeed in other sectors as well. And I think that conversation hasn't been had yet, and I think we're going to need to have that conversation. We rely, for example, on many components for renewables from other players, some very reliable, some less so. Could we source them closer to home? What does that mean in terms of mining, for example? These are very difficult political questions. And I've moved away from your core point about banks and what has happened. There is still time for us to deliver banking union. But I would plead with the banking system across Europe, don't wait for a crisis to force you to do it. Please work with us now. First steps, next year we'll come with something. Thank you for your support, really appreciate it. We need to bring others along on this journey, and certainly in my time in this mandate, I will do my very best. I think I'll do more on CMU than banking union, but I don't give up hope.
Thank you. Thank you very much. Nadia, you want to add something?
Well, 2 points from my side. Well, first, I share your frustration. You're very, very elegant in not saying how frustrating it is, but it is. I share your frustration because as I said before, I was responsible for financial regulation at the time of the crisis, and I was the one drafting the SSM and SRB and the single supervisory mechanism, the single resolution mechanism. We had prepared all the pillars at the time. Then I left to do other stuff. And the next time I came to the ECOFIN, we were exactly at the same point that we were. I mean, well, the Single Resolution Fund has money, which it didn't at the time, but other than that, we have not made a lot of progress on the other files that already had been crafted at the time. So it is frustrating. And from Spain, we have devoted a lot of energy in the last 4 years to try to drive and to help these files move ahead. And because I fully share what you're saying, which is fix your roof while the sun is shining and not when you are confronted with the crisis. I mean, you already heard me. This is like a top priority when I am approaching economic policy issues. And so I hope that we are able to make progress. I think there is a window of opportunity now because of the drought in the area of liquidity. Not only in the area of water, but the change of monetary policy is creating a new playing field, a new scenario, which I think is going to create very strong incentives for consolidation, for integration of capital markets, and also for cross-border integration in the banking sector. So I do hope that we seize this window of opportunity that we may have in the coming year to try to bring, to step up, the regulatory framework. And one of my to-dos as of January is green finance. I see that there is also the time is ripe. We have the taxonomy. We see how other parts of the world are really not moving as fast as Europe is, so we can lead in this area. This provides us with a competitive advantage if we manage to do it right. There is strong interest on the side of companies. There is a growing interest on the side of the financial sector, a genuine interest, I think. So I think that now the time is also ripe to move ahead in the area of green finance together with the banking sector, together with the capital markets, regulators, central banks. A lot of work has been done, is being done in the European Central Bank, and the Basel Committee. So I think that we probably next year we can also sort of support and have a step forward in that area.
Just one point. I think we're at a very extraordinary time. Because in the past, if you like, the money stories were separate from the environmental story, or we separated things into their boxes. Now we actually realize that money is the solution to the environmental problems. And without it, we will not get the change. And in a way, it requires a huge change in mindset. I'm not sure that regulation will change mindsets, but I think public discussions will. I think parliamentarians will, our ministers will, our leaders will, if we remind ourselves that actually what we're dealing with here is existential, but it has a solution. It's technology, and it's finance to do that. It's the research, because new things will happen and emerge, because this is the future. We don't just go back to the past. And because we have, as I said, a younger generation who are much more aware of these issues, and I think they will also drive the change. But I keep emphasizing the role of the financial system is not just to help the economy, the rest of the world change. It's actually important for the financial system, because the risks to the financial system, and my worry around financial stability, if we don't do all of this, are enormous. So in one sense, we either seize this moment of huge uncertainty to really ramp up our ambitions. We are not going back to January of 2022, where in one sense we were blinkered to what was really going on in our energy story. We have to move forward and really address this issue of resilience for all of Europe, even if the starting points are different.
Well, thank you. Both of you have been addressing some of the questions that has been raised, above all on green finance and the urgency of green finance. There are two other questions. One of these comes from the Austrian ambassador, who is here in the room, and who asks, what is the role for a digital euro issued by the European Central Bank? How do you see these tasks?
Will I go first, Madam? First? Okay. So, Ambassador, thank you for the question. Again, I've been struggling with this because it's a concept that I get, but when I try to explain it, I lose words. So here's how I speak about digital euro. I understand cash. I don't have it now, but it's somewhere here. I like having cash. I think in Austria, citizens particularly like having cash, and we could have a conversation about the amounts, but people like to have access to cash. But across many member states, cash is over. It's yesterday. If we did nothing around a digital cash, if you like, which is how I try to describe this, a digital euro, central bank, then at some point down the road, people would say, you were asleep. Why weren't you working on this? Where was the ECB? So we're actually addressing something today that isn't really looking for an answer, but we know it will in a few years' time. So the ECB, the Commission, the finance ministers, everyone's discussing this. Everyone has your question. But what we're doing in the Commission is we're going to have a legal framework. So we'll roll this out next year, this proposal. But there will be no rush by the ECB to make a decision because we have many questions that still need to be answered. You know, intermediation, what happens? What about a wallet? How much will I be allowed to hold in a wallet? All of these have got to be answered. So I hope I'm addressing your question, which is there's no urgency today for a central bank digital euro. But there could be in the future, and therefore we need to prepare the ground, to use an agricultural phrase, so that when we throw the seeds down, it will work. You could imagine if we said, no, we won't bother looking at this, and maybe the next commission or the one beyond look back and say, why didn't they see this coming? So it is also in line with 100 countries globally looking at this. We're not the only one. It is in line with the whole digitalization of our economy. And it also, in my view, is a little bit to a defensive issue because we heard and knew that some big tech companies were talking about their currency. What would that mean for central banks, for monetary policy, for governments? So I think we're doing the right thing. We're doing it in a very measured way. And I think what we need then is to have this public conversation so that we make this tangible for citizens and that they ask the questions that maybe we haven't thought of yet. So that's my summary. There's lots behind it, but happy to hand the microphone.
No, I fully agree with what you're saying. I would just bring another element or another angle to it, which is the geopolitical angle. You mentioned it. But I think this is very relevant. You know, when you have China looking into this, the US looking into it, some other currencies, of course, the Swedish central bank is the one that's most advanced in Europe. But when you see that this is within a context of the shift in the tectonic plates on which the global economic and political order has been run since the end of Second World War, you need to be a player in this new scenario. So I absolutely support the work which is being done by the European Central Bank. And I think we don't have an urgency as such, but we cannot be behind the curve on this one either.
They told me that we have just 5 minutes to close the session. Let me ask something again about what we see and we don't see. We have seen in the last months something quite interesting, the destruction of something like $3 trillion US dollar wealth due to cryptocurrencies and the XT crisis. this is the numbers. To me, what is even more interesting is to see those people who were claiming for freedom, independence from the powers and the central governments and the states, and now they claim for regulation. This is a quite interesting paradox, but this is what's happening in these days. I think for $3 trillion, it's a huge amount of money, but it's less than 4% of the total wealth, and I don't think they have raised any systemic risk to the financial system. What we have to do? We have to regulate the cryptos, or which will be my first choice, just let burn them. Don't create the incentives for creating an industry which is safer and which attracts investors, because regulation make them safer and more attractive to people. What do you think about that?
Okay, so you really have three choices with crypto. You ignore it, Wild West, keep going, more crashes, more problems. You ban it, that makes it go even worse, or you regulate it. So, you know, these are the issues. Europe has decided to regulate, so we have now a piece of legislation. It will take 1 year before it comes into force on markets in crypto assets. I was in Washington recently, and there's a big interest in what we've done, and it's super that we're exchanging ideas and information. But let's recall why these things evolved. It was for the very reason you have outlined. Those innovators did not want to be part of the regulated space, because they wanted a world parallel to the other world of boring regulated finance, and they wanted transactions to be separate from the normal route to business. Now, that's an incredibly, I mean, it's a science fiction idea, because money, if it's not regulated properly, as we know, can do horrible damage. I think we need to fully understand what has happened with this exchange, because my understanding is that maybe existing regulation in the US would have covered it, but we're not entirely sure. But my view, maybe it's because I grew up in a household where the saying was, if it looks too good to be true, it is too good to be true. But when I sat in a taxi not that long ago, and the driver tells me his son has 3 million worth of a coin, let's say, I'm going, OMG, this is like real now. So the truth is, it was very much a kind of an outside specialist grouping, but now it's filtering into young people. It's in the real world. It needed to be regulated. And we need to be mindful that there are, you know, very victim stories behind this. So you burn money, but it's somebody's money. They don't get it back. So there's a ripple effect, which is extremely serious. The technology and innovation that drives it might be helpful. On the other side, we have concerns around energy use with these evolutions. And my big concern is when people tell me nothing can go wrong with these systems, they're absolutely foolproof, I go, oh my God, don't say that, because something will go wrong, which is her cybersecurity and all of those other things. This time is not different. There's no difference. I mean, the world has learned many times over. We just forget sometimes the core messages. So I think Europe was right to regulate. Although at a conversation over dinner last night, one of the contributors said, but if you regulate it, you make it respectable. But I think with regulation, you also say, it's the opportunities and the risks. And if you are prepared, if your appetite is for a lot of risk, go with it. But if you're not going to go that direction, don't. It's been interesting that some banks were investing in this because clients were asking for it. And I think that once it becomes part of the normalized financial system conversation, it has to be part of it. You don't do exactly the same rules, but you have to make sure that there's something behind the claims being made. And clearly, with some of the recent evolutions, there was just nothing. It was all, it wasn't an NFT, it was just an NF, it was nothing. It was just an empty story. And I would worry about the societal impacts of that. Like I worry about the societal impacts of, you know, some of these, the GameStop, those sort of evolutions. And, you know, our role is consumer protection and to be aware of these risks. But I don't think you're going to kill it off, and therefore banning would just be not an option either.
Thank you.
No, we have supported from day one. One of the first things that shocked me in this debate was this talk about stable coins, and I keep saying always they're neither stable nor coins, you know, so let's please talk about them, call them crypto assets, whatever, extremely speculative, like any other bubble. Now we see, very much, the other saying is, it looks like a duck, it walks like a duck, it's probably a duck. No, in this case, it really looked like a bubble. It was. Now, does this mean that we shouldn't regulate? And I think this trade-off is relevant. Do we make them something respectable or not? But I very much agree with you. One has to be pragmatic. You cannot avoid this being repeated again in one way or another, so we need to make sure it is as safe as possible. But when you have an abundance of money, as has been the case in the last years, a bubble will appear somewhere, and it very much looks like this was one of the places. We support the European Commission's approach, and we will see, how to translate. Actually, we have anticipated some of the elements of MiCA already in our legislation, and our capital market regulator, financial market regulator. We've been very active in the last year in terms of empowering the Comisión Nacional del Mercado de Valores to act when there was fake advertising and issue warnings, etc., to try to minimize the social damage that you were referring to.
Actually, that's a really important point. Where are young people getting their financial information and advice? It's on social media.
Absolutely.
Who's looking at social media's role? We need to look at these things, and that's why, in one sense, we have to begin to think not in straight lines at all. It's like all of these things are moving parts. And I have 4 children in their 20s, so I eavesdrop on conversations. I don't ask questions. It's much better if you let them talk. And that generation are definitely think very differently around the use of apps, investments, a flutter every so often than perhaps an older generation. Now, we don't want to stifle their innovation or their potential, but we want them to be aware that there might be a downside. And as we've seen recently, there was a big downside. But a lot of it, if I read the papers around the exchange that has crashed, was to do with management and lack of, etc. I mean, it's probably the old story.
It was it's an old story. Yeah, it was not very new. Huh?
Yeah.
Okay, I'm afraid we have to close this conversation. It has been really a pleasure to have both of you, very clear, very focused. And I agree with most of the things you have said. But whatever I can ask, just join me to thanking our 2 guests today, because it has been really a very good conversation.
Thank you, Chair.
It has been a pleasure.